Imagine being able to peek into the investment playbook of one of the greatest investors of all time. Warren Buffett, the Oracle of Omaha, has built a legacy of wealth, wisdom, and winning strategies. Even in a period where Buffett was a net seller of stocks, reducing Berkshire's holdings by $166 billion over the past 2 years, he still managed to strategically double down on a select group of companies. And today, we're diving into 5 stocks he's betting big on in 2025. These aren't just any stocks. They represent core principles of value investing and showcase Buffett's timeless approach to wealth creation. So what does Buffett see that others might miss? Let's find out. Domino's Pizza might seem like a surprising pick, but it's one of Buffett's most significant buys in the recent months. Why? In my opinion, it comes down to trust and innovation, and especially growth. 15 years ago, Domino's transformed its image with a bold marketing campaign, admitting their pizza needed improvement. This transparency, combined with innovation, has cemented its place as one of the world's most trusted brands. Domino's new Hungry for More initiative focuses on technology and franchise support to enhance brand value, and it clearly shows as the company has demonstrated steady growth. But what's most impressive for me is Domino's long-term performance. In 2009, they reported $1.4 billion in revenue, which nearly tripled by the year 2023 to $4.5 billion. Even more remarkable is their earnings per share growth, rising more than tenfold during the same period, from $1.4 billion to almost $15. This demonstrates their exceptional ability to create value for investors. While I'm not a fan of Domino's high PE ratio of 26, I can't help to admire their ability to compound and grow shareholder value over time. And after reviewing it, I understand why Buffett is fond of this company. Sirius XM Holdings is one of the more interesting additions to Buffett's portfolio. The satellite radio operator is back on the radar of institutional investors. But what makes it so appealing? First, it's a legal monopoly. There's no competition in the satellite radio space, giving it unmatched pricing power. Secondly, the revenue model is subscription-based, with 77% of its revenue coming from subscriptions and only 20% from advertising. This creates stable cash flow even during economic downturns. However, there is one concern. While Sirius XM's revenue climbed steadily from 2009 to 2023, the trend seems to have flattened. In fact, the company experienced its first revenue decline in 15 years. And so far, the 3 reported quarters for 2024 also indicate a decline for the year. That said, Buffett's attraction to Sirius lies in its valuation and fundamentals. It's trading at just 7 times forward earnings and offers a 5% dividend yield, an incredible value in today's pricey market, in my opinion. I know, Sirius XM is a boring company, but Buffett has often showed that boring doesn't mean bad. In fact, it's often reliable. Exciting businesses like this can offer consistent returns over the long term. Next up is Occidental Petroleum, a company I covered reviewing Lilu's portfolio. 3 years ago, Buffett didn't own a single common share. Fast forward to today, and Berkshire holds 264 million shares of this energy giant. That amount accounts for over a quarter of Occidental's total shares outstanding. So why the sudden interest? Well, in my opinion, it boils down to 2 things: valuation and future growth. The company is trading at a decent 13 price-to-earnings ratio, signaling fair valuation. And on the growth side, they have a strong and diversified strategy. The Crown Rock acquisition alone is expected to bring in $1 billion of annual cash flow at the current oil prices. And they're projecting another $1 billion from various non-oil initiatives by the year 2027. So, with a fair valuation and ambitious growth plans, Occidental is shaping up to be a compelling opportunity. It's no surprise Buffett has taken a significant stake, and it certainly caught my attention as well. I am actively considering the stock for my portfolio, as I believe its solid fundamentals and growth outlook could make it a valuable long-term position. Chubb, a property and casualty insurance giant, is another stock Buffett is quietly building a position in. Insurance has always been a favorite sector for Buffett, and Chubb exemplifies why. Insurance companies benefit from premium pricing power. They can raise rates after loss events or even in anticipation for future risk. Chubb's niche on insuring high-valued homes make it even more profitable, as high earners are less likely to default during economic downturns. Additionally, rising interest rates have significantly boosted Chubb's float, the premiums collected before claims are paid out. Investing this float into treasuries creates a reliable source of income, making Chubb a standout in the insurance space. Finally, we come back to Berkshire itself. Buffett has repurchased around $78 billion worth of Berkshire shares since mid-2018. While he didn't buy back any shares last quarter, this strategy still plays a crucial role reinforcing investor confidence. Share buybacks reward long-term shareholders by reducing outstanding share count, effectively increasing earnings per share. It's kind of a way for Buffett to signal that Berkshire shares are undervalued. With a record $325 billion in cash and cash equivalents on hand, Berkshire has ample room to continue this strategy. It's a powerful reminder of Buffett's faith in the empire he built over 6 decades. So, what can we learn from Buffett's 2025 picks? These 5 companies embody the principles of value investing. They're resilient, profitable, and positioned for long-term growth. Buffett's approach reminds us to focus on businesses with strong fundamentals even during uncertain times. As we navigate the market in 2025, perhaps the best strategy is to take a page from Buffett's playbook. Think long-term, stay disciplined, and invest in what you understand. So, if you enjoyed this video about Buffett's holdings, consider subscribing and clicking the like button, as it does help to grow my channel. And as always guys, thank you, and I hope to see you in the next one. Bye.